lockdown phase, no matter what we've been delivering, and we've been at it, and we're truly COVID warriors in that sense. So, so just to give you a background before I start and my relevance to the food industry, because you see me coming in from a consulting avenue. So I've been in the consumer space, advising and on the brand side for about 16 years now. So I've been working very closely with F&B brands. I was in my earlier role a CFO and Chief Strategy Officer for Smooth Chocolate. So we've seen that brand grow 6x from the time we started prior to that. Then I've been closely advising a pub out of Bangalore called House of Commons. So we've got about 4 properties in that space, and a couple of other dessert brands in the milkshake space that I closely work with as well. So in addition to that, there are a few fine dining brands that I, as well as my firms, closely involved in terms of advising. So what I want with that backdrop, when Ashish and team reached out saying, hey, can you talk about how do we really look at financial planning during this phase. So one of the things that struck me, and also from the question that I've been hearing from my clients that I've been closely working with, was while all of us know and we're trying to do a lot of experiments today, there are a lot of measures that we've all taken. There were a few questions on what measure do we take at what point of time, and earlier in the conversation when we heard that there's a K-shaped recovery that's likely to happen. Now, K-shape again is something new that's kind of come up as well. So, which is, like Ashish also has been saying, which is very scary, because you've got 2 different trajectory of growth. So where you'll see certain sectors continuing to grow well and fast, certain sectors which require assistance may take a much longer and prolonged time, and may not grow at the pace at which we all would anticipate it to grow. And unfortunately, the hospitality industry falls on the lower trajectory, which requires assistance. But India is behaving in a very, very different manner to that order. So keeping all these changes in mind, it's important to have a framework and see what choices do we make at what stages, which is what I'm trying to cover in the current node, and which will allow you to experiment with different options at different points, because every industry today within the food service category, every subsector is in a different span of recovery. So that's where I'm going to spend a lot of time on. One piece that I'm not covering here is debt. Primarily because debt is specific to a particular company and company capability credentials, founders capability and credentials. So that's a point that I'm keeping out, but I'm trying to work more on how do we manage with what we have and what can we make within the system that we are in is the larger area that I'm focusing on. So first up, a critical question that I've been trying to answer for some of our clients also, and this is a question that comes up in every other conversation these days, saying, hey, when is the recovery anticipated? When do we see normal course? And honestly, being on the other side, it's really a tough question, because it's something that nobody has even predicted. I mean, it's something that has happened after the Spanish flu a century ago. So this is something that all of us are witnessing new. Nobody knew what trajectory, etc. But with time, all of us have learned how things are moving out. So there have been varying answers to this question. So is it 21 the year after, or 22, or is it going to be further stretched down to 23? So this, mind you, I'm referring to the sectorial recovery, which is FN as an overall industry. When do we expect it to come back to the pre-COVID levels? So interestingly, one of the world's largest consulting firm, McKinsey, in July came out with assessment for various industries in the US. Now, while this may not play out to be exactly in for India, but there is something that we all can learn from it from an India standpoint. Hence, I pull this out for all of our benefit. So according to McKinsey, the food service and accommodation business, so they are pegging it to have a recovery of anywhere, during 23, or it can go down to 24, depending upon how the virus containment scenario will span out. So even today, as we speak, we all know about the vaccine status and how things are moving. But interestingly, the point that Ashish brought up as fact also is interesting. I'm going to talk about it in the next couple of pages. But what we should keep in mind is, irrespective of is it going to happen in 21 or 22 or 23, or individually within a business, it may change. But let's anticipate a seesaw impact to come in. So we don't know when can things go back, when can things become move towards the positive trajectory. So it is likely to be a sinusoidal sort of a phase for us. But honestly, I'll be happy if it's not going to span out that way, and I'll be happy if I'm wrong on this data point. But it's important to be prepared for a scenario like that, and hence I'm raising that voice of concern. Saying that, despite of when the recovery may happen, so various sectors, so some of the business that I'm closely involved in, so one of the business that we've been seeing, so very close to pre-COVID numbers, thanks to a lot of initiatives that's happened there, etc. But the fact is, just like the way the pandemic hit us at different stages, different geography, different manner, different means. So the recovery is also likely to follow the same trajectory. So the recovery will be very, very different for every format that we all are in, at different evolution cycle that we are in, our exposure to different formats, sub-formats within the organization, the management team and the founders' risk-taking appetite to try out new things, and more so the ability of how much cash is left in the system and how much can I raise in the market today to even alter my model, will all define the time frame to get back. So to make it relevant and easier, so I've been trying to look at where would different businesses in the restaurant space kind of span out. So this is an important question that you all will have to individually kind of answer for yourself for the segments that you are in. So I call this the COVID business recovery stage, so which is basically 3 stages from uncertainty to certainty. Stage 1 is survival. So the data point that Ashish put out earlier in the conversation, where he said they're seeing 68% of the restaurants are back and up and running in that sense. So which means we are on majority of the restaurants have moved away from the survival or inching towards the revive stage. Now survive is also a stage where revenues are hit badly, less than 40% of the pre-COVID revenues. Your profitability is abysmally lower. In fact, it is deep down negative, and you're trying to manage ways of how do you ensure burns, do you run, do you not run, etc. Those are questions that you're answering at this phase. The productivity is definitely hit during this phase, and nobody has visibility of what is it likely to be. So this is like pubs, for example, is a classic case where across the nation there is no single answer to it. So even in Bangalore until last week or the week before, so we didn't know when is it likely to open, when can liquor be served, and things like that. But things are spanning out to be well in the last week or two post opening. The second phase is the revive phase, wherein we'll see consumers coming back for various efforts that you all have put in, boredom kicking in, or other factors which will push them to order, wherein the revenues will start coming back to the range of 40 to 70% of the pre-COVID levels. Margin pressures will be there, but you'll see some stable inflow your way, so that cash management to an extent will become relatively better compared to the survival phase. Now this is a time when based on what some of the panelists were talking about in the last context, so we'll see a lot of productivity measures coming in. So one of the points that came was automation. So you will see a lot of productivity enhancement that will happen within the organization, and if the organization is not moving in that direction, that's something that you should definitely keep an eye on and start talking to your teams to get that piece rolling, because that is going to go a long way in a post-COVID scenario, because of the new norms that everybody has been talking about. While these are changing, but I would still call this phase as an uncertain phase, because we don't know what is likely to happen 2 months from now or 3 months from now. Do we see a sudden surge in the number of cases? Then will the government react to it? And what can happen is something that nobody can predict. So it's important to be cautious at this stage and not really take a very casual, callous approach in saying, hey, things seem to be back in normal, let's go ahead and do whatever else that we wanted to do as commitment. The third phase is honestly the phase that we all would love to be in, is the thrive phase, where we've revived the business, we've learned quite a bit, and this is a phase when revenues start hitting to 70% plus levels of the pre-COVID scenario. Units at a unit level, we start becoming profitable. We see productivity to have enhanced. There will be better processes, efficiency kicking in, etc. And there will be, while there'll be a bit of uncertainty on how things will span out, but we will be in a much better scenario compared to the previous two phases. So to use the frameworks that I'm going to talk about eventually, it's important for you all to see where do you actually fit in within these area, which cell do you fit in, or which of the three areas do you really fit in, does really help you in making some choices going forward. Now, within each of these choices, there are different challenges. So I'm referring to challenges which are specific to running the business, or primarily from a finance/cash management per se, and not really looking at other aspects. While there will be plenty of other challenges to deal with. In the survival phase, we would have seen a lot more challenges related to workforce, customers, whom do we work with, whom not to. So it was a phase of chaos where one would not know what to do when the whole phase started. But as we evolve, we will have a much better visibility towards how to handle some of those scenarios. Revive is a phase where a cash management challenge is at its peak. So while survive it is, but revive is a phase where cash management will be at its peak. You will have a lot of resilience issues coming your way, wanting and wanting, but it will be around this. Thrive is a phase where this is a phase where issues of returning to business. When do I scale up? How soon do I scale up? What is my source of income to scale up, etc. will be questions that will come during the thrive phase. Then very critical question that we'll have to answer during this phase is, in the new norm, what is my next norm relevant business model? So while all of us have been talking about cloud, DIY, and a few more business ideas that did come up, but I'm sure y'all are looking at ideas specific to your model, but which is the right one, and how do you have a POC going at the revive phase, and how do you go about it going forward, becomes very, very critical for your larger planning as well as sustenance. So to get all these things in place, you need a very robust plan for cash requirement. So it's important for you as owners of the business or leaders of the business to have a tab on the cash and have a very, very robust financial management system, or a MIS. If you don't have one, you should definitely have one, which is focusing on a weekly basis. And I mean, gone are the days when we're looking at fortnight, month, quarter. So right now it has to be weekly, wherein we're making weekly calls, make changes on a weekly basis, keep communicating to ensure these elements are kind of taken care of. With that backdrop, at a broader level, these are some cash improvisation steps that I'm recommending at an overall level, and we will bucket it based on the stage that you are in. So broadly, there are two aspects at stage one. So, which is measures that we have to take around the revenue stabilization aspect, which is to do with the inflow side of cash management. The second piece is to reduce costs, which is to do with the outgo side of cash management. Now, on the revenue side, I want to bring up two critical elements. One is, how do you have a renewed business model, wherein today, while like Mr. Motwani pointed out earlier during the conversation, where penetration of online has significantly increased in the COVID era, which is definitely right. But as a brand, have you been in that space? Have you been nurturing that space, and have you already been there? If you haven't, then have you made that effort to be there? Because being there and growing from that point is going to take a while. I'm sure that those points will be addressed in the coming session, but that's an area which needs focus. Takeaway is another area which is likely to further go up, and it's going to become a very, very important cash generating engine. There are a lot of contactless methods which have come in the entire value chain of handling consumers, to taking orders, to even delivering orders. So what kind of methods do we adopt to ensure that we have a renewed business model which is different from what we were prior? All critical points addressed from a consumer worry standpoint, and we're out there to generate our inflows to whatever maximum level possible. The second piece around renewed business model is the element of communication. So like Ramya also kind of brought out a very valid point, saying they've reached out to 60% of their 3 lakh customers. So which is something from a communication standpoint. So it's a tough time. It's a tough time for our consumers. It's tough for our vendors. It's tough for everyone in the system. So that element of communication is critical. So even if we are taking a hit on the purchases, or on the side of payment delays, etc., it is important to have communication channels up and running, having frequent conversations, keeping our stakeholders aware of what is happening is critical in this phase. The second large point on revenue stabilization is rationalized menu. So we cannot do what we were doing in a pre-COVID scenario. So there has to be a cut down or a reconcized menu that needs to be offered today. And now, when you're reconcizing the menu, it's important to keep your cost attributes in mind. It cannot only be driven by the kitchen team to rationalize the menu based on their convenience, but we'll also have to factor in which products were giving us better margins, which products were giving us a better margin and better volume. You need to use those spectrum to rationalize your menu to ensure that we've got the right products, the right amount of products, and we still don't go on the food and paper costs. We're at controllable levels on the food and paper costs. So that's a very critical element to really keep our eyes on. Moving to the second aspect around cost. So one of the important things, and this is something that I've seen is at times emotional decision as well in terms of store closures. So there will because we've all been in the offline mode, or brands which have been exposed to offline mode. So we'll have a lot of outlets running, some extremely underperforming, some pulling us down completely because of the cost structure of those outlets. We would have made future investments, but it's important to take a decision based on your future cash flow projection, wherein you should at least hold liquidity or have plans of liquidity for a minimum period of 6 months. In my view, anything below that is going to be a challenging aspect, and you need to revive it on a month-on-month basis. So keeping that in mind, if you see that there are some stores which are not letting you do that, you should take those tough calls to exit those properties, or else survival may become a challenge until as you find a second source of funding which will allow you to do that. The next bit is reduction on certain fixed costs, because variables on the COGS side fixed, you've got multiple costs that you could play around with. The most common one that's been up for debate always is rental renegotiation, reduction, and in most cases you've got tough landlords on the other side who are not budging to renegotiation on a complete waiver form, but there are multiple methods that one could adopt. And from my own experience, I've seen only about 40-50% of the cases where some sort of a relaxation has happened. In the remaining 50% of the cases, we've seen landlords to be, at least they've been flexible in during the lockdown stage, but once they've seen traction in the market, they've started asking to go back to the old levels, etc. So we'll talk about what methods to be followed as a separate one in the next minute. The other aspect is how do we rationalize purchases? The third element is pay cut, and do we really need so many people in the recovery stage, depending upon what stage are we in and the automation level that we could afford to do. The fourth bucket will be on discretionary spend. So you may have a lot of discretionary spends on consultants, on brand agencies, and PR agencies, and everyone else. So it's important to make those choices right on whom to hold on to, whom not to hold on to, depending upon what phase are you in. So what I've done is all those a long list of areas that one could look at, I've tried to group them into 6 main buckets on the left-hand side, and across the stage of where we are in terms of business recovery, what should we be doing at each point. So taking point 1, which is on the wages and staff side. So this has been a tricky and challenging one for all of us, I believe. So during the first phase of survival, I'm sure some of us even went down to sub 10% levels of staff, or even 0% if we're not operating. But I've seen a lot of restaurateurs holding on and paying whatever they could to their staff because of the relationship, etc. But if you are in the survival phase still, what is recommended is not to have more than 30% of your staff, and also try and see if you can work on a 50% wage and compensate your staff on a good day in the future. And the staff on the ground have also been understanding enough to appreciate this, and I'm talking this by experience. Revive is during the revive phase, it is recommended to be in the 30 to 60% staff, owing to the current norms, social distancing norms, number of tables that you can actually put to use, etc. So having 30 to 60% staffing and rationalizing your org structure on the ground becomes pretty important, and see if we can go towards 50 to 70% wage payout during the revive phase. And thrive is a phase when we go back to the earlier days or use best practices. So that's a phase when we see staff to be in the 80 to 100% scenario. So it'll be good if you can cut down to about 80% and manage your operations to similar levels of pre-COVID norm with about 80% staff, which will help you recover some bit of the losses that you've been carrying for a while. But again, it depends on business to business, measures of automation that you would have taken, and SOPs that you would have changed during this phase as to can you achieve 80% at the thrive stage, or will you have to go back to the old norms. The second piece on vendor management, which I'm sure there'll be a lot of steps that you all would have taken. But what I've seen is brand A to brand B, they would have taken a certain measure, but brand B would not have done the same thing. So keeping those in mind, I've tried to bring in 3 critical points as a larger framework that you all could probably look at. So one is we might have been carrying a lot of unused stock at the survival stage post lockdown, and there is continuing stock that may have piled up in the past. So if there's an opportunity to return it back and take credit for it, that's something that one should definitely look for and do it on the survival phase. 2, can we renegotiate payment terms at this stage? By my experience of talking to a few vendors as well as on the other side, yes, that is definitely an aspect that's available. One needs to kind of talk to the vendors, articulate it to them, and have certain commitments going, and also identify critical vendors whom you can vouch upon, whom you would have probably done a favor in the past, and see how do you leverage that relationship today to navigate through the tough time. Then third element is you need to have a payout plan and a communication about the payout plan. So again, go back to the point of communication. No matter what you do on the reduction on the tactical point of view, but communicating it is very, very critical, because in today's context, managing every stakeholder in the value chain is the most critical aspect. Even that's more critical than just the cash management, or because these two are interdependent on each other. The third element is purchases and inventory management. I mean, this has been an area where I've seen lapses in among a lot of brands, while brand owners claim to be doing a lot of things there. But I mean, there are times when things do, things tend to be missed out. So here, what is recommended? 3 points. One is based on the rationalized menu, like I pointed out earlier. It's important to look at which are the low cost contributing products with better margins, which is where you need to go back to your recipe costing methods to look at which one's doing well, which one's not. Use all the tech and analytics that you've invested on in the past, which will help you to give those insights on what menu to carry. The second piece is to bring down the inventory holding. So what is advisable to is not hold more than 3-4 days of inventory. And if you can do it at a level which is much lower than this, which is absolute, that will be the best case scenario that one could be in. But what is ideal to hold is not more than a 3-4 day inventory. And this is important to keep an eye on a week on week basis because of the recovery phase. So if you're moving from survive to revive to thrive, the inventory holding that you will have, or the absolute value of the inventory that you will have, will keep changing. So it's important to anticipate and play around with the total value of inventory, but try and keep it to a 3-4 day sale equivalent, and not really more than that. If you can be below that, it is ideal. Now, there will be one-off products in the whole scheme of things, depending upon the type of business you are in. So the common culprit here is MOQ. So many a times it might be packaging material, more so with packaging material or some critical ingredients, where you will get a better discount with an MOQ or higher volume. But unfortunately, in today's time, if you fall into the survive or revive phase, it is still okay to lose that extra buck. And go with low volumes, even though your unit cost of buying it may be on the higher side, because that will allow you to conserve cash and give you liquidity. I mean, in an otherwise scenario, would have said the reverse of buying it and then holding it if you could liquidate it in a much faster time. But in today's context, it is absolutely acceptable, and you should look at it closely to see which are those high cost products where your total billing value is extremely high and lying as inventory. How do we bring those down? And even if the unit cost goes up, how do we negate that impact is a critical element to really look at. The most favorite topic on rental negotiation. So one or two methods that one could probably adopt. If you already passed the survival phase, the waiver piece, I think, is already passed, but I put it here for the sake of completeness. So we've seen we've seen some cases where there've been waivers for about a month, some for about 2. Mind you, these are not just the brands that I'm working with today, but these are from conversations in the industry. 2, can you look at a via media wherein one could ask for a waiver today and compensate for it using the deposit that have already been made, or a commitment of future paying, which is in the next financial year. What's critical is to see off FY21, and any liability can move towards A22. Any part of it moving there is a good negotiation aspect that one could look at. If you're in the revive phase, the landlord's expectation will be for you to pay in full because your business is back and you're running. But from a financial perspective, if you are able to continue and hold on to this negotiation, even if you save 20% and you're able to push that to the subsequent year, that gives you leverage on the liquidity side, and it's critical from today's perspective. The other aspect is revenue share model. While revenue share model is a fancied model on the institutional.
Deepak, just 1 second. So we're just slightly running out of time. So maybe what you can do, we can just, if we can quickly wrap up some of the key takeaways here. And there are some questions. What we'll do, we'll send across those questions to you and make sure that the respondents, have been communicated about the questions they have. So sorry, but if we can just have a quick summary of, yeah.
Absolutely fine.
Thank you.
Yeah.
You can complete. We have to.
Yeah.
To go. Yeah.
So how much time is left, Nikhil?
Yeah, 2 to 3 minutes now.
Okay, cool. So apparently on the rental, then discretionary expense. So my advice is to keep it low if you can, slash it to about 50% levels also in the revival phase. That's critical. On closing notes, what's important from moving from revive to thrive, and this is something that I want to emphasize on, is how swiftly can you move away, or how swiftly can you have new business models which will allow you to navigate from where you are today to moving into the new norm. How can technology leverage what you're doing today and minimize your costs when we move to the thrive phase? And where can automation play a role when we move to the thrive phase? Now, these are 3 critical elements that you, as a restaurateur, we should keep in mind when we move from revive to thrive. So that's very, very critical in the new norm or in the post COVID era.